Hello learners, welcome back to Curious Commerce. Today we will going to learn fund flow statement, one of the most important topics in financial accounting and business analysis. Many learners get confused between profit, cash flow and fund flow. A company may show profit in accounts but still struggle to pay salaries or suppliers. Why does this happen? Because profit is calculated on accounting basis, but actual money movement is different. So today we will understand what fund actually means, how funds move in business, where money come from, where money is used. By the end of the session, you will not only understand the concept but also apply it in practical business situation. So let's start step by step. Our first question is, what do we mean by fund? In common language, fund means money, but in accounting, fund means working capital. Working capital is the money available for daily business operations. For calculate the working capital, we are using the formula, the difference between the current assets and current liability, or in short, working capital equals current asset minus current liability. Let's understand with practical example. Suppose a shop owner has cash in hand around 80,000 rupees, stock worth rupees 40,000, the total current asset is 1,20,000, the summation of cash in hand and stock worth. But he has to pay suppliers around 50,000 rupees. So working capital is the difference between the current assets and current liability, that is 1,20,000 rupees minus 50,000 rupees, that is 70,000 rupees. Thus 70,000 rupees is available for running business daily. Without working capital, business cannot survive even if it earns profit. So remember, fund means working capital. Now the question is, what is fund flow? Fund flow means change in working capital between two accounting periods. Once again, I will repeat. Fund flow means change in working capital between two accounting periods. For example, working capital in 2024 is rupees 60,000. The working capital in 2025 in the same organization is 90,000 rupees. It means, compared with the previous year, the working capital is increased by 30,000 rupees. This means business gained additional funds. But suppose working capital falls. For example, in 2024, the working capital is 60,000 rupees. In 2025, the working capital is rupees 40,000 rupees. Therefore, it was the decrease by 20,000 rupees compared with the previous year. That means fund moved out of business. So fund flow statement tracks where funds increased and where funds decreased. Maybe the question will arise. We already prepared the profit and loss account. Then why we need the fund flow statement? Because profit does not show actual fund movement. Let's see the real business example. A company earns profit of rupees 10 lakh, but during the year it purchases machinery worth around 15 lakh. So cash actually goes out more than profit earned, right? Company may face cash shortage even though profit exists. Fund flow statement explains the situation very clearly. So management uses it to understand where funds come from and where funds are used. Let us understand why we prepare fund flow statement. There are three main objectives. The first objective is to identify where funds come from during the year. The second objective is to identify how funds were used. The third one is to help the management plan future investment and finances. Shortly, we call it as an identify the sources of funds. The second one is identify the applications of fund. Third one is analyze financial changes and help for the financial planning. Just imagine, suppose a company suddenly faces cash shortage. Management checks fund flow statement and realizes funds were used to buy new machines. So now the management understand the situations. So think over the one more question. Have you seen businesses showing profit but still struggling for money? Once again, I will repeat the question. Have you seen businesses showing profit but still struggling for money? Now we are in the end of the session. Fund flow statement explains movement of working capital. It helps identify sources and application of funds. It is useful for financial analysis and planning. In the next video, we will learn about working capital concept in detail. For Curious Commerce sessions, please like, share and subscribe to Curious Commerce. Fund flow statement will be continued in part second. If you need the daily updates, follow WhatsApp channel Curious Commerce Financial Management Hub to know about the real business secrets.